And recording, here we go. Hey, good morning to you all. Josh Null here with Gulf Coast Financial Advisors, coming to you from downtown Fairhope. I'm joined by Brian Harris. He is the broker and CEO of Harris Vacation Rentals and Realty Group. Brian, how you doing?
We're good over here, Josh. We're really enjoying a huge rebound, which we'll get into, of the vacation rental market and the real estate side. It's really bouncing back very quickly.
Well, what we're going to do, we're going to jump into it pretty quick. For those of you all joining this or seeing this video for the first time, Brian and I have been getting together on a Zoom live webinar about every 2 weeks and walking people through what is going on with Lower Alabama real estate. Now, Lower Alabama, for those of you that are seeing this or not maybe familiar with that term, would include the beaches of Gulf Shores, Orange Beach, and then really you could say South Foley as well, because Brian operates in that market down there, investment properties, beach rentals, houses, things of that nature. Brian has a pretty unique perspective on this in that he manages well over 100 properties down there and has really got his finger on the pulse of what is going on, not just from an investor standpoint, but also what buyers and or sellers need to know. I think as you all would want to go back and look at some of the previous videos, you'll kind of see the journey of Lower Alabama investment properties over this COVID-19 pandemic, and it's pretty enlightening. Brian does a great job of giving you the details that you need to navigate the real estate market during this time. So with that said, we do have some not surprising, but some kind of neat positive results to share.
Yeah.
Brian, I'm gonna go ahead and turn it over to you, man.
Sure. All right, let me get the screen share going here, and I think we'll be off and running. All right, you should have COVID-19 real estate market update. Yep.
Good.
Okay, so like Josh said, thank you, Josh, for that introduction. My name is Brian Harris with Harris Vacation Rentals and Realty Group. We're based in Gulf Shores, Alabama. We do both sides. We do the transactional real estate brokerage side, that traditional side. We also do vacation property management. We're more boutique style, more high service. We manage about 120 properties, really focus on that kind of luxury, side of the market, the higher side of the market. But what we do every day is help investors purchase and own their vacation investments. And that's what we're going to talk about today. The biggest thing, really, let's see if I can change slides here. There we go. That's me, Brian Harris. We'll have more contact information at the end. Really the overview, and I want to kind of start, Josh, with really the conversation has changed down here. And like Josh alluded to, if you go back and watch, I think we've done 4 or 5 of these videos, these updates, the conversation really has changed a lot. And it's changed a lot on the business side in our local market. And one of the things that hasn't changed in the conversation that I think we all need to kind of keep aware of is this is still a serious health crisis, pandemic. That hasn't really changed. And I think people need to continue to be safe, make sure they're doing the precautions that they need to in your local area, whatever your health officials are saying is the best practice for your market or your, not market, but area. Follow those guidelines because this is a serious disease. It is taking lives. It is something that we need to continue to be aware of. Now, shifting gears back to kind of our local market and our investment community, the owners on my rental program, that's what we're going to kind of focus on today. That conversation on the business side has changed drastically since, late March when we kind of did our first one. And we'll get into all that. We'll talk about the current real estate market and run through some stats we've been tracking on several of these calls. We'll talk about the current vacation rental market. Key items there, huge booking demand. Key metrics for all categories are up over 2019. Last time we did this call, it was kind of up or improving. Now they're all up. So we'll get into kind of all that. And then we'll talk about new normal. That's kind of the hashtag of the moment. But we'll talk about what is new normal for the vacation rental industry. And then action items, vacation home owner and seller. And then honestly, we'll really kind of touch on the investor and kind of what your mindset should be right now, if this has been something you've been thinking about, and we'll kind of get into that a little bit as well. Okay, so conversation has changed. The real estate market is very healthy right now. It is also very aggressive. We're seeing things come on the market. Good deals are getting offers, same day, before lunch. It's really, really aggressive. If it's priced right, and it's a good, conditioned product, it's going to go really quickly. If it's priced right and it needs some work, it's going to go pretty quickly. And we're seeing both sides of those. Vacation rentals back in full force plus. And that's just the best way to kind of tell you how the bookings are right now. We're back 100% plus some. We're running out of things to rent to people in June and July. Another thing is that we're seeing investors are looking for good diversification strategies. We had a pretty significant market correction. We've seen some of that come back. Now we're seeing a little bit more volatility. So people are kind of wondering, hey, maybe I should pull out, maybe I should diversify. I mean, real estate for the right group has always been a terrific diversification strategy. And it still is. So we're seeing a lot of those conversations. So just to kind of highlight some of the conversations, and these are all conversations I've had with current clients or prospective clients in the last probably 7 days. And we'll just kind of go through a current client. We have decided to go ahead and build a 6-bedroom home on our lot. Okay, so this is a client that has a property, doing very well in our program. I think we pushed 20%, 25% past the goal we set for this house for this year. And they've decided, hey, it's back. It's time to go. Financing's good. Let's build on this vacant lot that we have. So that's a sign of a very confident investor, a very confident client, and we're going to move forward and keep going. Next conversation. This would be a way to diversify our retirement savings and generate income. Okay. And that's kind of going back to that diversification kind of model. This couple was in their, I think, late 40s. Kids were getting ready to kind of go off to college. They're looking at their financial picture and saying, hey, maybe we should take a little bit out of the retirement savings or stock market or whatever and diversify and put it over here and see if that helps us balance a little bit. So that's another strategy, another client that we have. I would consider tearing down our older home and building a new one if the numbers made sense. Now, let me explain a little bit about what this is. And this is actually something that my family is currently in the process of planning and doing for this August. The Gulf Shores, if you haven't been to Gulf Shores in a few years, there's been a lot of building in probably, I'd say the boom's kind of been the last 6 or 7 years. So we've got a lot of rental inventory that's new. So let's say our rental inventory was here, 6, 8 years ago, and we keep building new. So now the quality of the rental product is elevating because there's so much new product on the market. And I call it the HGTV vacation. Everybody wants to go on vacation and have a little bit more luxury than they have at home, right? They want a little bit bigger TV. They want a little bit nicer, decor. They want that HGTV experience. And that's what's being built in our market now. And a lot of the properties that maybe for our, in our case, these properties might be, 20, 25, go up pushing 30 years old. We've got to make the case of, do we invest a lot of money in new bathrooms and kitchens and still have, a pushing 30-year-old house? Or do we take that property down, leverage the value of the lot, the sand that it's on, and build, new private pool, tiled showers, extra. And that's the numbers tell us that that's the way to go. When you look at it 10 years down the road, that's the way to go. So that's a client that's just, and what that tells me is there's confidence there in the rentals. There's confidence there in the market going out 10 years, 20 years, if you want to make that kind of investment. All right, what's another one? If we can get that for our lot, okay, that price in the current market, then yes, let's sell it, okay? And this is a conversation with somebody that's had a vacant lot in Gulf Shores and probably have owned it for 12 years. They decided, that building and moving to Gulf Shores really wasn't in their plan. They're kind of in the southern Midwest. They just decided that moving down here wasn't for them. So they just kind of been sitting on their lot. And now the market's kind of caught back up to where they can sell it and kind of get out of it or make a profit. And that's something that they're interested in doing. So you've got sellers ready to sell. You've got buyers, which we'll see, ready to buy. So there's a lot of confidence in the market on both sides right now. And that, that conversation has changed a lot from 8 weeks ago when nobody knew, kind of what was going to be happening. Okay. So current market stats. So these are the updates that we've been doing over the course of the last few weeks as we push through these updates. This is new listings. So this shows you week over week, going back to late March, what the new listings in the coastal market. This is Orange Beach and Gulf Shores. Okay, so this is only the coastal. Now we all, as a brokerage, we do a lot of Baldwin County, but we're focusing this on the coastal market. So we've seen a strong listing trend of new properties hitting the market, but we probably don't have as many as we need actually hitting the market. And it looks like we kind of had a little bit of a bump in this kind of early May, and that's tailed off a little bit, but I would say that that trend line is kind of very slightly to the positive if you go across the whole chart. We need more inventory. We're seeing good inventory go, like I said, very, very quickly. Almost to the point of becoming, I don't want to call it a seller's market yet, but a seller with a good piece of property to sell can go and command a good price for it. Okay, next stat. This is closed transactions. Okay, transactions that have actually closed and changed to ownership. So what we've seen, and we referenced this a couple of weeks ago, that early May, you can't see where I'm pointing, but I'm pointing at this early May. I guess I could use my mouse here. This early May area, that was probably the early to mid March where everything kind of hit, and we didn't have the pending transactions back here to close right here. Okay, and one of the things that we're seeing, and we'll see it in another chart, is pending transactions are coming back and closed transactions are coming back. Josh, did you have something you wanted to ask?
Well, yeah, just very quickly, as a point of reference for the previous webinars we've done, particularly the very first one, you felt at the time that if the market would react quickly and we would see a change in price adjustments, which, as you've laid out before, generally speaking, when you see a price adjustment on a listed property, typically it's moving down.
It's going to go down, yeah.
Right. And so, and then we quickly, there in the next webinar, we saw the exact result of that with the pendings and the closing transactions. So on this, my question to you on this, Brian, is do you think that we've kind of surfed that initial wave of not knee-jerk reaction, but maybe the market kind of correctly pivoting for people that needed to sell? And now you're seeing, I think what you alluded to earlier, maybe not necessarily what you would call quote unquote a seller's market, but are the numbers telling you that the sellers are being a little bit more prudent now or a little more picky? Can you read that in the numbers?
Well, I think that there's a couple things going on. I think one, people that were sitting tight, March, April, but also, you know, really focusing, because if there was no rental revenue, that was going to be a big issue for them. Are now kind of exhaling and breathing a sigh of relief and saying, okay, I don't have to sell. You know, we don't have as many I have to sells as somebody might have predicted, 10 weeks ago, because the rental revenue, even if you're, let's say a 2 income household went to one where you live in Missouri, the rental market has come back so strong that that's starting to pay for itself now. And in March and April, we didn't know if these properties were going to pay for themselves. So if the properties don't pay for themselves, you're going to have a lot of people say, this doesn't make any sense, let's unload it. Okay. And I think we've avoided that wave of let's unload it because it's not making any money. I don't think that's going to happen. I think what we're going to have now, the distress is going to be if you had two significant incomes, and that allowed you to purchase this property, and now we only have one, then we're going to have to look at the budget as a household, and the beach condo or the beach home may not make that cut. That's going to be one of the first things to go in that scenario. But I don't think we're going to have a wave of, and that's kind of a prediction I had made before, like we're going to have a wave of inventory, 4 months from back then, which would be hitting in next, few weeks. I don't think we're going to see that. I think we're going to see some 1 and 2. This doesn't work for us. Let's find a realtor to unload this. I don't think you're going to see the price reductions as you might expect to see in a distressed situation like that, because the market's so healthy and there's so many buyers looking to grab something. I don't think you're going to see a ton of price reductions. Things are going to go quickly.
Well, and Brian, on that, think about specifically what we're talking about. These numbers you're providing are related to lower Alabama real estate, correct? This is Gulf Shores.
Yeah, this is all Gulf Shores and Orange Beach. And if you know our market, that's the 2 municipalities on the Alabama Gulf Coast.
And so think about what you and I and really the general public have learned since you and I first went live with these back in March. Is we learned that one, Baldwin County in particular seemed to kind of navigate the number of cases and the things that were happening pretty successfully so far, right? Knock on wood.
Right.
2, we learned that heat, outdoors, sunshine, not a bad thing when it comes to all.
Right, sure.
3, we learned that families were together now and they wanted to stay together, but they still wanted to have maybe an enjoyable experience, like in a vacation. So I think on the last webinar, the one before that, you were talking about family units coming in and basically, quarantining in paradise. Maybe that'll be a new Jimmy Buffett song. And then really, what we,
you got to copyright that quick.
Yeah.
Send it over to him.
That's pretty good. And, we learned all these things since you and I first came on, which we didn't know at the time. Right.
Yeah.
And I think it kind of gives a little bit of comfort, and probably why you're seeing these numbers, in the fact that, even God forbid, we do have another spike or this thing comes back later in the summer and the fall. This thing's your market down there has kind of went through the fire a little bit. And I think it absorbed some of the impact. So I wanted to make that point, and then I'll
in another conversation, this didn't make the slide before, and this is an agent that I was just talking to, just in general terms about the market. She said she had a new client from New York. It may have been actually Manhattan. I'm not exactly sure on that, but urban New York, and they basically pulled up the map of COVID-19 cases in the U.S. and said, where is it the least affected? And Baldwin County, Alabama was, at the very top of that list. And they haven't, as far as I know, they haven't made a transaction yet, but, called up this agent and started looking remotely, virtually. He can work anywhere with his job. And it's just a situation where they've decided that, urban New York is just not for them, anymore, or right now, depending on how everything goes. But they're looking specifically to get away from, the COVID crisis, and Baldwin County, Alabama was on the top of the list. So back to, let's see, closed transactions. Here we go. So closed transactions, like we said, this trend line, I would say, again, is very stable and trending positive. Okay, which is exactly what you would expect as we kind of come into the summer in market. I think this little spike is just an abnormality in how things close. I don't think it really indicates anything significant. I think our trend line is just, upward pacing moderately. I think one of the things that the closed transactions tell us is that the market is healthy. Okay, if we were seeing new properties come on, but closings start to kind of go down, if it was a downward trend and not a, stable trend, then I would be concerned that one of two things are happening. Either financing that people thought was going to be there to help close a transaction wasn't there, or the buyers got scared for whatever reason, which we saw, 2 months ago. We saw buyers just get nervous, like, hey, I'm just not sure I want to do it. But what I interpret from these closings are the financial market is healthy. People can get financing, get into the office, and actually get it closed, and they're confident that this is still a good investment. Their investment strategy, their thesis is still one that they are behind. So I think that indicates good consumer confidence and good financial market. Okay, pending and under contract. This is probably the best looking graph of the whole presentation. We might get to a few in the vacation side that I personally like more, but this is pretty awesome. Basically, starting here in late March, early April, not a lot of things going under contract. The real estate market kind of took a pause. And ever since that pause, we're seeing just upward momentum, more transactions week over week as a trend going forward. So that tells me, and what I'm hearing from bankers, what I'm hearing from agents, what I'm hearing from, closing escrow agents is that they're slammed. They're super busy. And this is just the Gulf Shores, Orange Beach. This is more focused on the coastal. It's really throughout the county, primary residences, people just doing the traditional, real estate, moving from this neighborhood to that neighborhood, moving into Baldwin County, altogether, building, all of it. So we've got, market aggression is gaining momentum. Okay, I think people are continuing to be very aggressive in the market, and the market needs more listings. I think one of the biggest things from this week that I'm seeing very clearly is that if you've had any thoughts of selling over the last couple of years, this could be a very, very good time to go ahead and pull the trigger and sell, whether that's your downsizing, whether that's your upsizing, whether that's your, vacation investment, capital gains taxes. We want to go from a 2-bedroom condo to a 3-bedroom condo, or my condo doesn't have an indoor pool and I want that, or, my house is second tier, but I'd like to be right on the beach and just walk out or sip coffee on my deck and see the waves roll in. There are buyers in the market that will buy your property and allow you to upgrade. So that's one thing that I would definitely want to convey this week. Price changes. So this is a stat that we've been kind of watching because, again, I think it tells you a lot about, it's kind of one of those forward indicators of market health. And we saw not a lot happening right here, not a lot happening kind of as everything kind of broke free. And then we saw the spike in price changes. And Josh, that was kind of, when we first started this was the prediction. We're going to see some price changes and people get aggressive and unload. And I did that personally with a couple of properties. And now we've seen from that spike, we're seeing it get more stable. It's more than it was before when everything kind of stopped, but it's not this upward trend where everybody's chasing the next person to get the lowest price and pushing rates or prices down. We're not seeing that as much. We're seeing some people be aggressive, but a more stable, environment. So stabilizing, less fear on the seller side, I think are the two main takeaways there. All right, summarizing. This is just on the real estate side. Really still an aggressive market. And that's something we've been kind of talking about really the whole time. Apart from that very beginning couple of weeks, we've seen a really aggressive market. We're seeing price reduction stabilize. Even though we have aggressive buyers, we're seeing price reduction stabilize because they are making those transactions happen. Pending and under contract, a very, very strong aggressive trend with properties going under contract. And I think that's really more buyer fueled aggression in the market than seller fueled. And the scenario there, sellers, it was seller fueled. It was everybody, let's just get out. That stock market scene where it's just, he's like, sell, 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 sell. That's not what we're seeing. We're seeing buyers say, buy, 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 buy. They want to make transactions happen. They want to get something done. So it's really a buyer fueled aggression in the market. New listings increasing slightly, but we probably need more. If you look back at this chart, this is things going off the market, pending. And this is new listings. So that's stable to slightly increasing, and this is running off the table. So those are not matching up. We need more. We need more properties to sell. So that's where I'm kind of saying, hey, looks like we're starting to get into that maybe seller's market. And if you've got something that you want to just put a sign in the yard and say, hey, somebody come get this, come pay me for it, you might can get it. All right, closed transactions continuing to be a strong trend. That tells me there's a healthy financial market and there's a lot of buyer confidence in those investments. Action items. If you are an owner, at the very least, you should be figuring out what your property's worth in the current market. Whether you really want to sell or not, update your personal financial statement, update your kind of balance sheet personally as a household, figure out what those properties are worth. We can obviously help you with that. It's a good time to sell. It really is. I'm not just kind of blowing smoke here. And the numbers could be telling us a completely different thing, but it's not. This is a good time to sell. If you need to sell or want to sell, it's a good time to sell. And it could be a terrific time to upgrade. And we're seeing a lot of that type of transaction happen. And we've got some information on our website about 1031 exchanges. If you don't know what that is, basically, if you have an investment property and you're going to sell and make $100,000, and Uncle Sam's going to want their cut of that $100,000 in capital gains taxes, you can do a 1031 exchange, roll that money into a new purchase, a new investment property, and you don't have to pay tax on that capital gain. You basically push that tax out till later. So that's a terrific strategy, one that I'm actually doing personally right now, and we do all the time with clients. Action items, buyers, investors. You got to have your ducks in a row. You got to be ready to pull the trigger. I want to think about it. I'll get back to you in a week. It's gone. We saw a property hit the market Tuesday. Spent some research on it. This is my personal stuff. By I think 2:00, they already had an offer in, or maybe it was I think it was the next day they had an offer in. So good properties are going very, very quickly. You have to be ready to go. Sellers, distressed sellers. I think the biggest thing to say is don't wait. If there's a distressed part of any of your position, and I know a lot of people are going to be in that position, there can't be that much unemployment and people not having to start think about their own personal balance sheet. Don't hide, don't wait, contact a professional. We can certainly help. There are a lot of tremendous real estate agents down here or wherever your property is. If there starts to become some distress or discomfort, call somebody quickly, start having those conversations. What we're seeing is that there are buyers that can take that property off if that's what you need. Okay, we are going to switch gears a little bit. Now we're going to talk about the vacation rental market. Okay, so we talked about real estate, went through those stats. Now we're going to focus on the vacation rental side of the business. And this comes from our management, portfolio and experience. We have seen massive booking demand. Okay, and I'll put this graph up. And if y'all watch the episode before, you can call them episodes. I think this number for May was like 1.6 million. And we talked about how much that was over our previous monthly record all time for our company was this 1,040,000. Okay. We set that record in January 2020. We had never had $1 million sales month. And last month, May of 2020, we had $1.8 million in sales, just massive amount of sales, calling old employees back and saying, can you just answer the phone? Like, I know you don't, we've got 40 properties that you've never even seen before, but please just answer the phone and call people back. It was that kind of desperate, but desperate in a good way. We had a terrific month. We're having another terrific month here in June. We're literally running out of inventory to sell or to rent to people for June and July. So just a tremendous amount of booking demand. We'll get on this slide. We'll kind of talk through that new normal everybody keeps hearing about. What is the new normal for everything? And we're going to look at, the peak summer and the fall. So what this chart is looking at is the trend line from our portfolio last year, 2019, to now this year. Okay. So we're looking at June, July, August, September, and October. Okay. And in June and July, we're seeing that we're way above this revenue. So we're way above on the revenue side, equating to we're way above on the occupancy side. Everything's getting booked up. I think one of the things that we're seeing, and overall in this peak summer, late summer, kind of getting into fall, we're up 17% on revenue from where we were last year. One of the things that I think we're seeing is July and August are showing the highest increases. And that's because we're in kind of the heart of that booking window. Okay, that's how far out people are going to book their vacation. And I think that we'll see that booking window as the weeks go past and that booking window hits, September and October, we'll have more bookings there. We're seeing a lot of demand that wants to come in July get pushed out to August. And the reason it's getting pushed out to August is there's just nothing to book in July. Another thing that might be causing some of this is school schedules. Okay, and we'll talk a little bit more about that later. New normal, and that's kind of referring to school schedules, work from home conditions, all those types of things, a lack of organized youth sports, a lot of those leagues not coming back, is creating what everybody's calling a new normal. So a new normal for vacation rentals is a reduction in the restrictions to travel for the late summer and the fall. So that's schools, work schedules, even birthday parties, weddings getting postponed, sporting leagues that kids are involved in. All those things normally create kind of restrictions to travel. And those restrictions, by and large, are not there anymore, or they've been pushed out. So we're starting to kind of think about, okay, on a pricing side for our owners, what do we need to be doing for August, September, October? If half the country is doing virtual school and half the country is doing work from home, well, we actually just invested in a whole Wi-Fi system for all of our houses to make sure everybody has terrific internet. And now they can come down and have terrific internet and, a pool and, sand under their, toes after work. So it really is creating could create a lot of extra demand for that late summer and fall period. We'll have to see how that plays out. Okay, so this graph is looking at the Harris Properties portfolio. We're talking about occupancy now, paid occupancy. So Harris Properties portfolio compared to the market. And a few weeks back, if you remember, we limited this to Baldwin County, Alabama, because Florida was still beaches closed, not doing vacation rentals. Now they're open and we're broadening our market to look at kind of the whole vacation rental market. As everybody can remember or predict, we had what I'm calling the COVID, dip here. March and April went way, way down. And I think that's saying 5% there for the whole vacation rental market. You couldn't have it worse, right? And then a huge rebound into May. We were right here approaching 80% for May, 92 and 90. A lot of these are even just properties that just came on the program or just, one little day gaps and stuff in the portfolio. And then you can kind of start to see this is the traditional curve that we have. The only thing that's not traditional right now is this huge dip right here. So incredible market rebound. March and April, obviously much slower, but we're seeing just a huge demand for travel. And like I said, a reduction in restrictions to that travel is creating, maybe even a longer season than we're normally used to. All right, summary and action items. I actually want to go back. Okay, here it is right here. Okay, so huge demand for bookings. Just this kind of summary of the vacation side. Huge demand for bookings, literally running out of inventory. We're seeing what we're calling demand push from July out into August just because people can't find anything to book. Vacation rental industry is gaining market share from other leisure travel alternatives. So that's really any fly to destinations. Obviously the airlines have got historic low, rates of travel. Cruise industry, obviously hugely impacted. Theme parks, hugely impacted. So all the alternatives, if you had the pie graph of what can we do this summer on vacation, and you're taking out, all these pieces of that pie, and the only thing left is lake vacation and beach vacation that we can drive to, then you're obviously, if you're in that market, you're going to see a lot of, extra demand for your product. And that's exactly what we're seeing. And for our owners, we're capitalizing on that extra demand by, market correcting price to make sure that we're creating as much revenue for that owner as we can. Action items on this side. Is your rental keeping pace with the market? Has your rental rebounded where it needs to rebound? And that's something that you've just got to ask yourself. What we are seeing is there's a lot of people upset with their current OTA, which is online travel agency, be it Airbnb or VRBO or whatever. If they're doing it themselves, they're frustrated with those providers. If they're using a management company, we're seeing a lot of people be frustrated with their management company. frustrated they can't get anybody on the phone if there's been layoffs or furloughs, or they're frustrated with how the management company responded to the crisis, or don't think they're bouncing back as quickly as they should be. A lot of the market is moving back really quickly. So on this graph, just to reference, Harris is the blue line and the market is the orange line. So if you're not feeling like you're getting as much rebound in the market as you should be, then it might be time to consider management alternatives, which of course we would love to have those conversations. Summary: rentals have rebounded drastically. This is the same summary from last couple of weeks ago. Rebounded drastically, and the revenue from vacation rentals will be similar to 2019 if health trends continue. And really, we should probably adjust this. We're seeing numbers be better in 2019 at this point for a lot of our houses. Now, some of our houses that have just a really huge March and April, it's going to be hard to pick that back up. And they may not end 2020 higher 2019. But a lot of our properties that either had, a private pool that's kept getting booked in that time and didn't quite lose as much, they're actually in front of where they were last year. So I think you can see a lot of stuff run in front of. And I remember this was probably 4 or 5 weeks ago, 6 weeks ago, I was having a conversation with Elizabeth. She's our director of reservations. And I'm saying, okay, well, in a couple of weeks, we need to figure out what our new goals are going to be, right? What our new normal, just annual goals for a company are going to be, because we always set goals like we want to push to that next number. And now we've decided we're not adjusting the goals. We had a pandemic, we had that COVID dip, but we're back and we're still going to run and try to get the same goals that we had at the beginning of this year because we feel like we can hit them. So we feel like we can get them. Okay, that's it. That's the summary. This is who we are: Harris Vacation Rentals, Harris Realty Group. I am Brian Harris. Josh, thank you so much for putting these things on and letting us come and kind of share the news. And I'm glad that we've got some good news to share. I think everybody's kind of ready to have some good news. So do you have anything you want to wrap up?
Yeah, I do. I want to say something in closing. One, Brian and I are friends, and we kind of work in a teamwork type of networking environment. I am a financial advisor that owns Gulf Coast Financial Advisors. He obviously is in real estate. And I think there's a couple of key points to make there. One, we are both locally owned and we are both independent. And maybe that's important to you, maybe that's not. But in my opinion, I think that's a pretty good thing to bring to the table. We both not only are our businesses locally owned, but we live here. We have kids, our families are here. We really are in depth immersed our whole lives in this area. So I think it just gives you a better understanding, a better feel for what's going on. And to be honest with you, Brian, I think it's part of the reflection. Leadership is being reflected in some of the numbers that you're showing, because you absolutely got out ahead of this to the best of your ability, and you really used your communication tools and your networking and your marketing and all these things you're doing to navigate this as best as you possibly could have.
Sure.
And now you're seeing the results of that. So I say good job. And
thank you.
Anybody that's looking for locally owned independent, realty and property management or financial advisors, obviously Brian and I work hand in hand together, even though we have completely unaffiliated businesses. Particularly, as I've expressed before, being here, the majority of my clients are in Baldwin County. Baldwin County is one of the fastest growing counties in the United States, not just on the Gulf Coast, but in the United States. So a lot of my clients have real estate as part of their portfolio. And so it's good for me to stay on top of this too, because it helps navigate the questions I get. So Brian, that's all I've got to say in closing. I do need to read my disclosure very quick. But if you'd like to say anything before I do that, we'll end on that.
Yeah. One last thing, and you kind of hit it, locally owned and locally operated. One of the things I think that separates us from a lot of the companies that we compete with in our market on the management side, we manage about 120 properties, give or take a little bit. And we like that boutique, kind of setup. We're very high service. One of our competitors in the market manages 120,000 units across the world. And for me, there becomes a point where you get too big, and you just can't give the level of service. You can't know your owner. You can't know your guests. We've got some guests that are in our properties next week. She met me when I was 7. They've been literally renting from my family since for 30, going on 35 years. So there's a different structure. There's a different presence when you're that invested in your business, in your industry. So I think that's really is what's setting us apart.
Couldn't agree more, and very well said. Well, on that note, if you all will pardon me, I need to read a quick disclosure. As part of my Gulf Coast Financial Advisors, my advisory services are offered through Prime Capital Investment Advisors, a federally registered investment advisor. The preceding commentary and responses are the opinions of myself, Josh Knoll, and Brian Harris, and are not necessarily the opinions of Prime Capital. They were for informational and educational purposes only. They are not and should not be considered investment advice. Past performance is no guarantee of future results. No guarantees expressed or implied. And if you need professional tax guidance, you need to seek out a professional tax service person. All right. So Brian, with that, we wrapped up another one. You did a great job.
Yeah.
Man, I tell you what, if the numbers keep getting better and better, what are we going to do with this? It's just looking really
good. Well, it's nice to throw some good news out there, and we're happy that we've got guests. Nothing more gloomy than an empty hotel. Well, and empty vacation rentals are just right there next to it, but they're not empty right now, and there are a lot of people having a lot of good memories made.
Results like these are always the fruits of taking and focusing on every single day, one day at a time. I think you've done a great job with that. So kudos to you. Thank you all for joining us. Josh Knoll, Gulf Coast Financial Advisors, Brian Harris, Harris Vacation Rentals and Realty Group. And we'll see you all next time.
All right. Thanks, everybody.